Now I will discuss the residential status of Hindu undivided family. Hindu undivided family would be residents in India if its management is made from the members in India. If not, will be considered as a non-resident. It means here is very important as per section 2 clause 31 is the definition of the person. If a person is the resident in India, definitely Hindu undivided family and company also will be residents and non-residents. Because we are taking the decision on the basis of a manager and karta, his residential status in the situations we are paying, we are calculation of the tax and he will be assessing, not assessing. So here is very important discussion is that what is the residential status of a Hindu undivided family. As per section 6 clause 2, I will not discuss here more details is the what is the residential status and what is the terms and conditions. Here I will be discuss only what is the terms and conditions for the Hindu undivided family. When Hindu undivided family said to be a non-resident in India, if during the previous year the control and management if its affairs is situated wholly outside of India. I have already discussed in the last lectures in the what is the assessing, what is the previous year, what is the assessment year. I will be discussing again. In other words, it will be non-residents in India if no part of control and management of its affairs is situated in India. Control and management refer to the decision taken regarding affairs of the Hindu undivided family. The control and management like in the place where decision regarding the affairs Hindu undivided family are taken. Hindu undivided family is a residence in India. It is to be further determined whether it is residence and ordinary residence or residence but not ordinary residence in India. When Hindu undivided family said to be a residence, ordinary residence in India, the Hindu undivided family shall be said to residents and ordinary residents in India if Karta of the HUF satisfy both the following conditions. What is the following conditions? Karta or manager must be residents in last 2 out of the 10 previous years. It means last 10 years he will be stay in India, 2 years stay in India. With immediately preceding irrelevant previous years, not gap. He must be in India at least 730 days during 7 years, immediately preceding the relevant previous years. When is Hindu undivided family said to residents but not only residents in India? Section 6 clause 6 subclause B. Section 6 clause 6 subclause B. Hindu undivided family which is residents in India is said to be resident but not ordinary residents in India during the relevant previous year. If a manager karta of Hindu undivided family does not satisfy anyone last 10 years, out of 2 years he stayed, and 730 days last 7 preceding years. The two conditions. We can say A and B. For determining whether Hindu undivided family is a resident or not, the resident status of its karta for the relevant previous year is of no relevance, but the determining whether Hindu undivided family ordinary residents in India or not. It's depend on karta status of the preceding year of yes the become relevant. Accepting individual and HUF, all persons are classified either as residents, not residents. They are not be further classified as ordinary residents or not ordinary residents. Okay, clear? A Hindu undivided family residential status will be depend on the manager or karta. I'm asking for a manager who will be manage a family as a karta. Is a person as per section 2 clause 31. We have already discussed is an individual HUF company. AOP, BOI, artificial person, juridical person. All its come is a person. If suppose I'm an individual, I will be what will be my residential? It depends on the A and B condition. How many years here stay in India and how many days stay in India out of 10 years and out of 7 years. If I am satisfied both conditions, I am resident in India. Okay, and here not is a suitable place. Here is the fully discussed in the residential status here. Now I will be here is again discussing here is who is assessee and what is the assessment year and previous year. Section 2 clause 7, any person as per section 2 clause 31 sum payable under the act, income tax act. Any proceeding is taken under the act is deemed. Here is the two types of assessee, deemed assessee and representative assessee. And assessment year section 2 clause 9. Assessment year means the period of the 12 months. It comes off the not comes is 1st January to 31st December. It comes to 1st April to 31st March. Conceptually, assessment year is the year in which a person's total income is assessed to taxation. Previous year, section 2, clause 34, previous year means previous year as per section 3 defines a previous year as the financial year immediately preceding the assessment year. We can say other words, in the previous year is the year in which income is earned by an assessee. Now we will be discuss here the whether clubbing of the provisions of applicable to here Hindu undivided family. We will be discuss now point of view income. As per section 64 clause 2 Income Tax Act 1961, Hindu undivided family from property converted by the individual into Hindu undivided family property. Then shall be clubbed in the hands of individual or not in the hands of Hindu undivided family. The converted property is subsequently person's income derived by the spouse from such converted property will be taxable in the hands of individual. It is here many family members demand first. There are two types of persons are as follows. Some family go out of the fold of others remain joint. Sum of the property is divided into other remain joint. Not recognized for the tax purpose is after 31st is 1978. Now I will be discuss is the gross total income. Gross total income note is that GTI is not necessarily the amount of money that a person has received in hand. It is the total income respective whether it has been spent as a karta and saved or invested in the futures of the gross total income. Now I will discuss the features of the GTI. In gross total income have four features. Number one, comprehensive income. Number two, deduction income. Three is basis of tax calculations. And fourth is indicator of earning. GTI include all forms of income regardless of their sources. This could be salary, income from house property, profit from business and profession, capital gains, and income from other sources. As a Hindu undivided family, it is the suitable points for the grand total income because many family members earn maybe some person is the doing job as a salary, some property and income, and some person have a business and professions, and some returns from the property as a capital gains in the share markets and mutual funds, and some is source is income from other sources. It is very important features for the calculation of Hindu undivided family. Now, number two is pre-deduction income. Gross total income is the total income before any deduction or exemption are applied. It does not take into account any tax saving, investment, or deduction under Section 80C to 80U of the Income Tax Act 1961. And third condition is basis of tax calculation. Gross total income serves as the starting point of calculating tax liabilities, deduction, exemptions are subtract from the GTI to arrive at the total income, which is the taxable income. And last point is indicator of earning. Gross total income is a comprehensive measure of an individual or HUF entity's total earnings. It provides a broad picture of the total income generated by Hindu undivided family in a financial year. Now I will be discuss the total income. Total income is calculated by subtracting the deduction and exemption allowed under the Income Tax Act from the gross total income. Those figures will be get the amount of the income which a Hindu undivided family is required to pay for the tax, and person here is a section 2 clause 31 as a Hindu undivided family. And what is the features of total income? Post deduction income. Total income is the income that remains after all eligible deduction and exemptions have been subtracted from the GTI. These deductions could be under section 80C to 80U and section 24 clause B, home loan interest and others. It is that I'm talking about here is the total income, pre-deduction income, taxable income. Taxable income is income which is an individual or entity is required to pay tax. The tax slabs are applied on this income to calculate the tax liabilities. Derived from GTI, it is calculated by subtracting eligible deduction and exemptions from the GTI, gross total income. Total income is derived income as it based on the gross total income. Indicator of net income. Total income provide a more accurate measure of an individual's or entity's net income. It reflects the income it is actually available to individual or entity or use after accounting for tax, saving, investment and deduction. Now we will be discussing the difference between GTI and gross total income and total income. Here we will be discussing the four parameters. Sorry. Definition, taxations, components and purpose. Definition. First we will discuss on the basis of definition. GTI is the total income earned by an individual or organization before deductions like tax and other allowances. GTI includes income all sources as a Hindu undivided family as a salary, business and professions, capital gain and other income. Now is total income as a Hindu undivided family is the income that remains after all permissible deduction and that tax had been accounted for. GTI minus TI. GTI minus deduction is equal to TI, total income. Taxation. Tax is calculated on the total income, not on the gross total income. Tax is directly calculated on the total income. And third point is component. GTI include all types of income, salary, house property, business and profession, capital gain, other sources. As a Hindu undivided family, total income is derived by subtracting permissible deduction and exemption from the GTI and the purpose on the basis. GTI gives a holistic view of an individual or organization earnings. Total incomes gives a clear picture to the taxable of a Hindu undivided family or organizations. Now I will be discuss here is taxability of Hindu undivided family. When Hindu undivided family invest its fund in a company or firm, any fees earned are taxable to Hindu undivided family if they are a result of the investment. If the fees are earned due to services provided in a personal capacity, they are taxable to the individual. If a loan is given from the Hindu undivided family funds and interest is earned, it is considered income of the Hindu undivided family. If a loan is provided from a personal funds and interest is earned, then it is considered individual income. Hindu undivided family. According Section 10 Clause 2 as per the Income Tax Act, when money is given from Hindu undivided family to any family members, that amount cannot be deducted from income and is not taxable for the member individually. Stridhan refers to a property owned by a woman, individual property, not is the part of Hindu undivided family. It is very important point because every family has is the Stridhan. This Stridhan not is the part of property individual. It is a individual property. A woman not is the part of Hindu undivided family. It is not considerable taxable as the part of Hindu undivided family income. Earning obtained period to person belong to Hindu undivided family, while earnings obtained after the persons belong to individual who is a partner. It is clear. Now here is I will be discussing here remarkable is Hindu undivided family tax advantage. We can say the deduction. Separate exemption limit under Income Tax Act law rupees 1,50,000. Separate deduction 80G, 80C, partnership shares, salary of Karta Dharta member, no TDS on interest, separate income deduction on interest self-occupied house property. Tax saving through Hindu undivided family. Hindu undivided family can savings through and survivorship principles, persons, Hindu undivided, special gift by the further Hindu undivided family, a special gift to Hindu undivided family. I will be discuss all points in the coming slides. Now is very important discussions deduction of Hindu undivided family, deduction available to Hindu undivided family as per Section 80C. Insurance premium can be paid on the life any member. It will be deducted. Section 80T deduction available in the Mediclaim policy in the health of any member of the family. Section 80DD deduction for maintenance including medical treatment of a dependent who is a Hindu undivided family member. Section 80DDB in respect of medical treatment of any member Hindu undivided family. Section 80G donation to recognized of the charity trust. Section 80IA, 80IB for new industrial undertaking. As per income tax as advance tax, TDS, penalty, interest, fine, etc. also are also applicable in Hindu undivided family. Because Hindu undivided family in the case of a individual assessee. Here is a separate exemption limit under tax income tax 2,50,000 section 80G donation. How many? 2,50,000. and separate deduction will be available. Section 80C is 1,50,000. Section 80D medical claim policy 15,000. Section 80D deduction of maintenance including medical treatment of a dependent who is Hindu divided family, salary of Karta Dharta. Wealth tax, separate exemptions of Hindu undivided family, it is 30 lakh. One house wealth tax free. Productive assets of Hindu undivided family exempted of the wealth tax. Capital gain benefits of Hindu undivided family. Cost inflation index benefits available to calculate cost of the assets. Tax benefit 20% of the tax long-term capital gains except of the non-listed shares. Saving tax on long-term capital gain possible by investing in capital gain bond of National Highway Authority of India. Long-term capital gain surviving the investing residential property. No capital gain to Hindu undivided family on distribution of assets on partial partitions and distribution. As per section 10, clause 2 of the income tax, any sum money received individual Hindu undivided family which is member is the exempted from tax. Stock market. Hindu undivided family can have a separate demat account. Make a money by investing of shares companies. Primary market and secondary market is the both. Both. Enjoy tax-free income for long-term capital gain by holding shares for more than 1 year. More than 1 year. Enjoy lower tax rate 50%, 15% on short-term capital gain. Hindu undivided family can invest it in the mutual funds. A Hindu undivided family consists of individuals who have from a common ancestor. In addition, Hindus, even Jain, Buddhist, Sikh families can create as a Hindu undivided family. The concept of Hindu undivided family as a separate entity of the tax purpose was first is recognized in 1970, and over the year many families have enjoyed the tax benefit because of this. You can avail the different tax benefits under the Hindu undivided family. Separate entity from a legal point of view and accounting principles also. Individual member of the family have PAN card and HUF. It's a separate PAN card. HUF can run its own business to generate income. It can also investment in shares and mutual funds. I have already discussed. And being a separate entity, the Hindu undivided family enjoy a basic tax exemption 2,50,000. your spouse, and two childs. In addition to income tax benefit you enjoy individually, you can also avail of an additional basic income tax exemption of rupees 2,50,000 lakh each year. Self house. Under under current income tax laws, if you have own more than one self-occupied property, only one of them can be claimed as a self-occupied property. If you have more than, it will be income from house property. If you are living in a one house and in the 5 rooms, and you are using 2 rooms and remaining is let, it will be rest of the dim to be let out, and you have to pay tax on national rent. HUF can own a residential house without having to pay tax. Sorry. In addition, it can also avail of a home loan to purpose a residential property avail avail the property home loan residential property, and tax benefit is up to 1,50,000 under section 80C. Loan repayment up to 2 lakh rupees interest thereon in section 80C if you will taking the home loan. Life insurance section 80C, it will be claimed under section 80C 1,50,000. Investment. As a Hindu undivided family allowed to make investment tax saving fixed deposit equity linked saving scheme ELSS mutual funds and tax benefit under 1,50,000 under the section 80C. Hindu undivided family cannot open a PPF account in its name. It can it can claim tax deduction for the amount of deposit by the Hindu undivided family in respective PPF account of its member. Health insurance, section 80D. You can claim deduction. It's rupee till 25,000 rupees per year and premium paid for health insurance for your family under section 80D. HUF can come to your rescue. You can claim additional tax benefit up to 25,000 on the health insurance premium paid during the year family members HUF. If the person is a senior citizen, the limit is goes to 50,000. Sorry. Important to pay tax regularly. It does not mean you cannot utilize the different tax benefits provided by the government. By creating on HUF, you can maximize your tax benefits. In the long run, you can consider investing in different banks' tax benefits schemes. Now, I will be here is for a discussion here tax rates. It is a Hindu undivided family, and section 115 BAC avails benefits. Yes, same is it was the tax rate as a individual and HUF company, and the same here is 3 lakh rupees is nil, 3 lakh 1 to 6 lakh is 5%, It means here is 3 lakh to 5%, it is the 15,000. And 6 lakhs 1,000 to 9 lakh, here 3 lakh. Last is 15,000 and here 3 lakh at the 10% is the 30,000. It total 5%, 10%, it will be here is the 45,000. 9 lakh, 1 lakh to 12 lakh is 15%, 12 lakh to 15 lakh is 20%, and above 15 lakh is 30%. Here is the surcharges in 8 conditions. Total 45 lakh income is the no surcharge. If 90 lakh is 10%, and less than 1 crore to more than it is, and 15% is the different is the in the dividends and surcharge on total income. Dividend is the 15%, but the total in other income is increasing 25%, and more than 9 crore, total 9 crore income is 37%. And after the surcharges, it will, one is says will be charges, health and education says. Health and education says they lived at the rate of 4%. When I study, it is the uh, senior secondary higher education, SE, senior higher H, uh, higher school educations in the past time. It was only 1%. Now it is the 4%. Income tax is the charges. Now is I have already discussed the smart studies advantage of a Hindu undivided family, help avoid to service tax, salary of a karta, use of Hindu undivided family income for expenses, distribute income of the co-persons, the co-family members, give law for a business, nomad and or AMT. And all is section here is section 80C to 80. I have already discussed, and some section 80C to 80D 1,50,000, and I have already discussed it will be increases to lakh rupees. 80D is you can go for 15,000, 25,000. If you are a senior citizen, it will be go 50,000, and 80D it will be available exemptions. And 80G it is if you are donate 100%, and all is same is here. And TDS is the as a salary house rent allowance is the same process, and the TDS last date is on this is same as a schedule I have already discussed. And this is the filling returns on from applicable of Hindu undivided family. And Hindu undivided family have a separate PAN card for the tax returns. Income tax return 2 and 3 applicable for individual or HUF both. Deduct TDS and filling tax return of the two separate legal compliances. And due date is 31st July, and it may be increased in the government it till 31st August and 30th September. Now we will be check your knowledge, and what will be your after the study, it is the beneficial, yes or no. What is the tax treatment of Hindu undivided family generated income? Subject to individual tax rate, subject to corporate tax rate, subject to 30% fixed rate, individual taxable Hindu undivided family rates. Here is the right answer is A, B, C, D, which is right answer? D. Individually taxable at Hindu undivided family rates. And this one is another question. For appraisal purpose, which is the following assets cannot be included in the Hindu undivided family is wealth. property obtained through joint family funds, property presented as a gift from an individual outside the family, property bequeathed to a female family member, property acquired using income generated by the Karta. A, B, C, D, which is the right answer? The right answer is the C, property bequeathed to a female family member. Now, after we will be do all concept clear, we will be start in numerical.